If you've been keeping an eye on the markets, then you've definitely seen the headlines about silver. Today, we're going to break down a really compelling analysis that gets into the massive and frankly unexpected surge in silver prices and why it's forcing everyone to completely rethink this critical precious metal.
It all starts with this number, $79.30. Now, the source material here makes a stunning claim. This isn't just some new record for silver. This is a price that has literally never been seen before in all of human history. This is way more than just a new high. It's a whole new paradigm.
So, what on earth is driving this unprecedented surge? I mean, the big question is why now? Well, to really get it, the analysis argues that we have to look past all the usual market noise, the speculation, the momentum trading. We need to uncover a really critical policy shift happening on the other side of the world that changes absolutely everything for the global supply of silver.
Okay, first, it's so important to understand that even the experts are kind of scrambling right now. The mainstream financial media is really struggling to explain this move. They're basically admitting that their historical playbooks, all the old economic models, they just don't seem to apply anymore.
And what's really telling is the language they're using. Listen to this: uncharted territory. I mean, those are the exact words from major outlets like Reuters. That is a rare and honestly a very powerful admission that the analysts have no map for what's coming next. The market is moving based on forces they've just never seen before.
And that brings us right to the heart of it, the core catalyst that this analysis points to. Turns out, while Western markets were on holiday, a crucial document was published by China's Ministry of Commerce. And this document, it's argued, is the real shockwave behind this entire price explosion.
You see, this document establishes something called state trading exports for silver. And this is an absolutely critical concept to grasp. Put simply, it means that for the world's third largest silver producer, every single ounce now requires direct permission from Beijing before it can leave the country. The free market has effectively been switched off and replaced by state control.
So let's be really clear here. This is not some simple tax or a tariff. This is a comprehensive system of control. The analysis calls it a choke point. Think of it like a valve that Beijing can tighten or loosen whenever it wants to prioritize its own massive strategic and industrial needs for silver over the needs of the entire rest of the world.
And the timing of this new policy from China, well, it could not have come at a more critical moment. It's happening right as it's set to collide with a period of absolutely exploding global demand from industries that are totally dependent on a stable, predictable supply of silver.
And make no mistake about it, the modern economy runs on silver. The whole green energy transition, we're talking solar panels, electric vehicles, is incredibly silver intensive. The exact same thing is true for the tech revolution. From AI data centers to 5G and semiconductors, demand from these sectors isn't just growing, it is accelerating like crazy.
And this quote really just says it all. When one of the world's biggest industrial consumers of silver, Elon Musk, a guy whose companies are on the bleeding edge of all this technological demand, when he publicly says something like this, it signals a very real and spreading anxiety throughout global supply chains.
So this massive collision of shrinking supply and exploding demand is exposing a really dangerous fault line in the silver market. It's a growing and maybe even unsustainable disconnect between the financial paper market and the cold, hard reality of actually getting your hands on physical metal.
So let's just break this down. On one side, you have the paper market. That's stuff like futures contracts, basically promises to buy silver later, and ETFs, which are funds that just track the price of silver. But then you have the physical market, where the actual industrial users are facing real constraints, and the metal itself is becoming, as the source puts it, harder and harder to find.
Now, if you take a peek inside the London vaults, which is a major hub for all this physical metal, you start to see just how vulnerable the market really is. This chart shows that of the 874 million ounces registered there, over 60% of it is held by just one exchange-traded fund. The amount of actual, free-floating metal available to meet all that industrial and investment demand is way smaller than that big headline number suggests.
And to make matters even worse, there's a critical shift happening in the futures market. Instead of just settling their paper contracts for cash like they usually do, investors are now reportedly standing for delivery, which is a fancy way of saying they are demanding the actual physical metal. This action directly drains the already limited supply from vaults like the ones in London, putting immense pressure on the whole system.
Which, of course, brings us to the central debate. So, are we just watching another speculative bubble, a mania that's destined to pop? Or is this something much deeper, a fundamental and maybe even permanent repricing of a commodity that is absolutely essential to the global economy?
Now, the bubble narrative says this is all just speculative froth, that it's not real. But the repricing argument, which is what our source material is focused on, says that calling this a bubble completely ignores the powerful underlying supply and demand forces that are really driving the price.
And here's that case in a nutshell. The analysis points to years of flat or even declining mine production. At the same time, you have an explosion in industrial demand plus a huge surge in investment demand. And now the final piece of the puzzle. A top 3 global producer, China, is actively slamming the brakes on its exports. It's argued that these are the classic ingredients for a severe supply crisis, not some temporary bubble.
And all of this leads to the source's ultimate and frankly most stark conclusion. The analysis suggests that the conversation is quickly shifting away from what the price of silver is going to be and toward whether you'll be able to get physical silver at all.
The author has a name for this, the unobtainable phase. It's a stage we've actually seen before in other supply crises, from computer chips to even baby formula, where the supply chain just breaks down so badly that the product simply becomes unavailable for purchase no matter the price. The buy button, well, it effectively just disappears. And really, that's the central question this analysis leaves us with. As the silver market continues its journey into this truly uncharted territory, the argument being made is that the greatest risk might not be about price, but about access itself.